Good morning, everybody. It's been, I think, like a solid week or so since I've done a live. I was having computer issues, full disclosure. And I am joined this morning by Bradley Gay, who is one of my CPAs here. I think this is his first time appearing with me, although he's been with us for several years now. And we're going to talk this morning about something all of our clients have been asking about, and it is, I'm going to use the official name, which is the ERC credits. But what it is all of those text messages and all of those emails and all of that mail you guys are all getting if you're business owners talking about payroll tax credits. So the lingo is ERC credits, and everybody keeps screenshotting them and emailing them to us and saying, hey, what is this? I think it's a scam. So Brad, who is our in-house expert on all things ERC, is it a scam? What is it?
Well, it's certainly not a scam. It's a credit the government came out with to promote retaining your employees during the COVID time. So during the pandemic, if you retained employees, you were able to get a credit of up to $5,000 per employee for the 2020 year, anything wages paid after March 12th of 2020. And for 2021, you can get up to $7,000 per employee per quarter in 2021. So it's a reduction or a refund of your employment taxes that you paid in part, and then a portion of the credit, and it's all refundable. It's cash in your hand. The government mails checks based on the calculation that we do. Now, there's a number of things that come into play, but it's basically free money from the government if you paid your employees during the COVID pandemic.
So to put that in non-accounting terms, which actually that was pretty non-accounting, but to put it super SparkNotes version is I paid my payroll taxes during 2020 because I kept my employees on payroll during 2020. I can now apply to get some of that money back in my pocket, right?
That's correct. Yep. So a lot of people receive PPP money, another thing that was thrown out there. And initially they said that you weren't allowed to claim the credit if you received PPP funds. They then changed that to we can reduce your wage base by the amount of PPP funds, and any remaining wages that you paid are still eligible for this credit.
Yep. So I know that
initially that you were excluded because you got other money.
Yes.
So we can still get some money if you didn't get if you didn't totally pay for your payroll with the PPP funds. There's probably something remaining that would qualify.
So then of that, well, actually, before I go to my next question that we get a lot. So just so people understand, so what are, when we've been doing these, because we do these for some of our clients, what are some of the normal amounts of money, the checks that they get that go in their pocket?
Oh, we've gotten anywhere from, I think 42,000 was, I think, the smallest claim that I've processed. The average is probably in the 150 to 200,000 range, and some have gotten over $1 million.
So this is real money, people. Like that's
real money. Yes,
that's like $100,000 check to you. What's your business? So
you have to make sure you qualify.
Yes.
There's gross receipts test, and there's partial shutdown tests that
Let's talk about that. So how do you qualify?
Well, the first qualification and the slam dunk is gross receipts. If your gross receipts, if you're comparing quarter to quarter from 19 to 20, if your gross receipts dropped 50% or more, you automatically qualify. And that's a quarter by quarter calculation. And if you qualify for one quarter, the next quarter is an automatic qualifier. So that's the easy one. And then for 2021, it's a drop of 20%. So if you realize 80% or less of your 2019 year over year comparison, you qualify for 2021, and it goes quarter by quarter.
So what was that percentage? So 2020, it was a 50% drop, correct?
Correct. Comparing 19 to 20, a 50% drop. Comparing 19 to 21, it's a 20% drop.
So everybody should really be looking at quarter two because COVID was March. So I think probably everybody had a huge drop, or I shouldn't say everybody, a lot of people had a huge drop in quarter two of 2020 because that was when the whole world was shut down.
Yeah, we're seeing, I mean, almost everyone qualifies for that quarter, depending on how much PPP funds they received.
Mhm.
But yeah, 2020 is pretty much a slam dunk for almost everyone. Maybe there are some essential businesses that stayed open and didn't have quite a 50% drop, but there may be other qualifications as well. If there were government orders in place that either partially or fully shut down your business or your supply chain, there's a number of things that could have been impacted in more than a nominal way. You can also qualify that way. So if we don't qualify for the gross receipts test, there may be another way to get you some money, depending on the state you live in. Now, Florida, we were pretty wide open, so the partial shutdown rules ended fairly quickly for most businesses in Florida. But other areas of the country, they had shutdown rules, like for example in New York,
Yeah.
really almost all the way through 21. They still had some government orders impacting how you do business.
I think California was another state that was pretty shut down.
Yeah, California is another one as well that was shut down well into 21, or many businesses
Yeah.
were shut down and couldn't do the large groups or go into businesses, things like that.
So even if they look at their year, so for the entire year of 20, let's call it 2020, the whole year of 2020, they ended with higher sales than they did in 2019. So they did better. They could still qualify for one of the quarters. If like quarter two, for example, if they were down, it doesn't matter that for year over year, they ended up higher.
Correct, right. We can look at one quarter, and then also restaurants may have even done better in many cases. While the shutdown rules were in place, people still needed to get food, and they they went to takeout. Right, it's completely
Mhm.
different for a restaurant. They actually they may have increased sales, but
Right.
still qualify because their in-house dining was completely shut down.
Okay.
And they adjusted on the fly, and they would still qualify for the ERTC.
So who does not qualify? Like, what about employee leasing? Does that count?
Employee leasing can still be done, but it's a much more difficult process. Your leasing company has to kind of
Mhm.
carve out your piece of the payroll taxes that were paid because it's all paid in a bundle.
Mhm.
Now it can be done, but it's up to the leasing company to do it. If you sign your own 941s, then that's easy.
Yep.
But the leasing company has to get involved and approve it, and basically put their name on the hook to sign off on it and amend the appropriate forms.
What is your experience with leasing? Not anybody in specific, generally speaking. Do you see employee leasing companies tending to be helpful, or do they tend to not be helpful, or is it really just all across the board?
Across the board, there's a couple that I've worked with that are helpful, and a couple where they don't really want anything to do with it because
Yeah.
it's just too much work to try to
Yeah.
figure out. If you've got, let's just say, 100 clients that you reported on one 941, there might be 100 amendments you need to do to get everyone their credit. But if
Yeah.
you do have a leasing company, I would recommend talking to them and say, hey, get me some money.
Yeah. Yeah, absolutely. Is there anybody else who should not even bother having that conversation?
No, not really. I mean, it's open to nonprofits, for-profit businesses. If you've got employees um, that are not related, so if it's a family business and it's mom, dad, and a couple of kids running the business, you wouldn't qualify because they're related parties. Those wages are excluded. But if you've just got rank and file employees, um, they more than likely will qualify. Those wages will qualify in some way, and if they're not offset by the PPP funds.
All right. So then last question, because I know everybody listening knows I like to keep these short and sweet so that we don't lose our viewers. But is there a deadline? When do they have to start having these conversations?
So the deadline is 3 years from the due date of the Form 941 that was filed. So, for example, 2020 quarter two, which most people will qualify for, the due date on that return was July 31st of 2020. So we've got until July 31st of 2023 to amend Q2 of 2020. So we're getting there, but we've still got plenty of time. So any quarters that would qualify, you've got 3 years to amend the return and get that submitted to the IRS.
And who handles that for them?
We take care of all of that. We do the full analysis to see what wages would qualify, and then we fill out the appropriate forms for each quarter that you would qualify. Make it real easy with e-signatures. It comes back to us. I sign it and send it to the IRS, and then it's typically been taking about 4 months to get your refund check. Some have been a little bit quicker, but we're telling most of our clients 4 months, and check should be in hand by that time.
So why should they not do it themselves? Why is this not a DIY thing?
Well, there's a lot of analysis, and you have to understand how the PPP funds are applied. That could easily be messed up, or we know how to navigate it to appropriately apply those funds so we maximize the credit. The amendment to the 941 is not straightforward. These are things that have not typically been on tax forms before. So you need to allocate properly how the amount of tax that was paid and the amount that is a real credit. So having those fields done correctly will get it through the IRS without question.
My last question, and then I'm going to let everybody viewing come to the end, is how does this affect your tax return? Because let's say in 2020, I already filed my 2020 941s and I've paid my payroll taxes and I wrote that off as an expense on my 2020 tax return. And now I'm getting some of that money back. So how does in 2022, which is where we are right now. So how does that work?
Well, you should go back to 2020 and amend the return because it is technically related to that year. It's one of the non-cash basis things that the IRS has given guidance on and said you need to go back and apply those refunds to the tax year that they came from. So if you receive a refund of ERTC for 2020, you should go back and amend your 2020 tax return. And it's not income necessarily, it's a reduction of payroll taxes and payroll paid to employees. So that's how they fit it in. It's you need to pay tax on it, but that's okay. Free money, you pay a little tax on it.
Everybody should go in knowing that. Hey,
yeah.
Don't go spend every dollar you get because there are going to be there's potentially going to be some tax consequences there. So deal with whoever your CPA is, make sure that they're in the loop. If you don't have one, we'd love to talk to you about it and we could be your CPA and advise you on that, but make sure that you consider all of that, like those lottery winners that go spend all their money and then they can't pay their tax. Let's not let that be you.
Well, we go through all of that when we have our initial consultation, we gather the information, we go through the tax implications. Here's what it looks like for the amount of money you'll receive. And then here's what you can expect from an income tax perspective, depending on the entity type that you have and how it was all structured back in 2020 or 2021.
All right. And then that obviously I was going to wrap up, but I thought of one more thing that I think is important to say. So obviously you had to be in business and paying payroll in 2020. So to qualify. Correct.
Yes. And there is a provision for new businesses that started up in 2020 that's an automatic qualifier as well. So if you've got a new business and you started paying wages in 2020, we should have a conversation about getting some of that money back from the IRS.
All right. Well, Brad, thank you so much for joining us today. We've had a whole lot of questions on this recently. I know there's a lot of mailers and text messages and emailers and all these people who want you to work with them to do these. So we've had a whole flurry of clients asking us about it. So if any of you listening have any questions, please reach out to us. You can call us. You can Facebook. If you're watching this on Facebook, you could message us. You can email us. However you want to reach out to us, we will get you connected with Brad so that he can help guide you through this. And we hope that you guys have a wonderful rest of your day. Thanks for listening.
Yeah, thanks. Have a great day.